Today, we're going to be talking with Roxann James and Kurt Hoenig from Coldwell Banker. You guys are based in Fort Myers, right? Is that Fort Myers or?
Yes, in Fort Myers,
Okay.
over off Danny Drive.
If you know where Top Golf is, it's right back to Top Golf.
Oh, yeah, the one that had all the screens blown down. Yeah, I saw that one.
Yeah, I saw that.
Yep.
Oh my gosh.
I'm sure their liquor's still intact.
Yeah, which is very important.
Can't golf without it.
Now, you guys work as a team. Do you guys focus on different parts of the market, or you both do listings and buyers agents?
Yes.
Okay.
Yeah, we both work with both buyers and sellers.
Okay.
And
If we're on the same transaction where we're representing a seller and a buyer, we split equally because we have to be at an arm's length on the transaction.
Okay, gotcha. What part of what areas do you focus on? Is it just strictly Fort Myers, or pretty much wherever the business takes you, or?
pretty much wherever the business takes us. Our biggest market is probably Lee and Collier County, but we go out into Charlotte and Hendry and.
I've gone as far north as Nokomis Beach and inland to Nokomis, as well as inland to, as far as we're going east, LaBelle, Lake Placid. Far west is, out in the peninsula on Cape Coral.
Okay.
South to Naples and north to Sarasota.
And that could be changing with the hurricane that just hit, I would imagine.
Absolutely.
Yeah, so
Oh, yeah.
it's going
They need
to,
us.
yeah.
That's what it's all
Yeah,
about.
because you'll have people getting rid of their property here and then moving a little more inland,
Yep.
just to avoid the circumstances again.
Although that didn't help with the flooding, though.
No, it definitely did not.
Yeah, which was kind of a surprise. So yeah, I had a couple clients that lived up in I forgot the name of it now, but it was it Winter Haven, I believe it is.
Winter Haven and Arcadia.
Yeah, they got hit really hard.
bad.
Yeah, which was a real surprise. So yeah, it'll be interesting that to see how that changes over the next year or so, because a lot of people just thought, heck, if I'm not going to live on the coast, I'll live inland and I can avoid all that. But
Yeah, it doesn't always happen. It depends on the side of the storm that you hit. Look at Orlando. Orlando got flooding, and they're not even on the water.
Yeah, and it was kind of a weird hurricane. How it just kind of sat over the land. It just rained and rained and rained. It didn't let up for 3 or 4 hours.
This
So
was worse than Andrew or Irma either.
yeah, yeah. I guess probably the best way to do this is maybe separately. So Roxann, if you can, tell me a little bit about your background. You don't have to go back from the very day one of your career, but
Well, I was born. No. Primarily, my background started off in marketing and insurance and underwriting. Went into accounting and decided 2 fields that everybody hates. Might as well get into something that somebody likes.
Were you always in Florida, or was it?
No, I started off in Idaho.
Oh, okay.
Yeah,
Wow.
in Seattle and Idaho both.
Yeah.
And then I got into real estate about 7 years ago, and this is the one field that people actually like.
Yeah.
It's amazing,
Yeah.
you get into a field that people like.
Yeah. Well, you either love it or you hate it. So, but
You really do.
Yeah.
And I've always been a
People
people.
either love you or hate you.
Yeah.
Oh, well, I'm sure there's probably a lot of that going on.
Yeah, it has to do with the personality a lot. It's like either it's a fit or it's not a fit. Yeah, so and you tend to know kind of instantly. So.
Yeah, within the first couple minutes, you know if you're going to like them or if they're going to like you.
Yep. So, what about you, Kurt? How'd you get started?
Well, I was born and raised in Iowa, but I wasn't actually born. I was discovered. I am adopted, and I'm from Fort Madison, Iowa originally, and I'm a Hawkeye. And I did 26 years in the hotel industry, overlapping with real estate, and I've been doing real estate since 2000.
Okay.
So sold multi-million-dollar properties down to, vacant lots.
Yeah, just all over the place.
Nothing is worth turning your nose up over because people always need you.
Yeah, and it's kind of interesting too because I found out that I've been in the finance business for 20-something years. So I used to manage money professionally on the mortgage side, and so I saw that side of it, and then I got into lending as well. So I've kind of seen both sides of it. But it's interesting how many different personalities you meet, and you never know who knows who. So
True.
Yeah, which is pretty interesting in our business too. So. But I guess one thing that I kind of want to dive into a little bit too is. We have a lot of challenges going on right now in the market. How do you guys see over the next year, kind of what's going on? What kind of major challenges do we have, and what do you see changing over that year?
I think all the changes are going to take place with inspections.
Yeah.
I think inspections are going to be a huge ordeal. I know we were talking just a little bit ago, but people are covering things up. So I really think it's important that when people do buy properties, that they get a good good home inspection, maybe a mold inspection.
Yep.
There's going to be a lot of properties that are going to be available for investment purposes. There's just going to be a lot of
Is that a separate inspection with regards to mold?
yes.
Oh, it is. Okay.
Yeah, you've got to have a company, a mold mediation company, come in and do the testing for it.
Interesting. Okay. And that's not something that's standard in Florida. That's something you have to ask for specifically.
Yes.
Okay.
Yep.
They're definitely a little more expensive, but with all the water damage that we've had, I think it's a definite necessity.
Yeah.
You know, take a little bit longer inspection period, get that done, because I believe they take a couple days to complete. Haven't had too many people do them in the past, but I think it's going to be more of an issue now.
Yeah. So what do you see going on the market right now with regard to, people's interest in buying? I mean, do you have people that kind of pulled back and said, there's no way I'm going to buy in Florida, or I'm definitely not going to buy on the coast, or is it really not changed that dramatically?
It really depends on the buyer, and it's also going to depend on availability of the properties, the affordability of the insurance.
That's going to be a major concern
Inventory
going
is what's
forward.
going to control a lot of it. And you've got a lot of displaced people, especially on Sanibel and Captiva Island, that may be looking to move inland and are going to have to wait quite a while, I think, for all these insurance adjusters to get everything done and then to satisfy whatever lawsuits might come out of it, if any. I hope not, but you never know. So it's really kind of a coin toss at this point.
Yeah, it's almost a bit like the Wild West. You just never know what's going to happen. I worked with a couple of different insurance companies, different insurance brokers, and I, in fact, have one going to a realty office with me next week and just kind of talk about what they're seeing is going to happen. But yeah, it's nuts because she said she's not doing any claims right now. Not that she can't, because they work with Citizens, which they're currently writing claims,
Right.
or doing new policies.
One of the few.
One of the few that are actually doing policies now.
Yeah, because a lot of them aren't writing insurance right now. They just put a freeze on it.
Yep, they definitely are. So, but she says she has no time because she's doing nothing but claims. So, but it's interesting because I've been in Florida now for 3 years, and which isn't a lot of time, but I knew that the risks were here. I knew that there were risks being 15 minutes from the coast of a hurricane, of water surge, of ocean surge. Right. And then also given the fact that Florida is so flat, there's always a risk of flooding. But we, as a buyer we're willing to take that risk.
Sure.
Everybody else. Yeah. And it's interesting because, me being in the lending business, you're afraid that the market's going to shut down, that people just don't want to buy here anymore. But I've talked to a lot of people and they just still have a lot of interest in living in Florida.
Well, you either put up with the hurricanes or you put up with snow. It's the lesser of the two evils.
And it's also a lifestyle.
I used to live in, it's amazing though, because it's true, because
It
I
is.
I lived in California, and I never knew until I actually moved here that California is the number one state for natural disasters.
Oh, I believe
I never knew
more
that until I
earthquakes
moved
there.
here, because fires, floods, mudslides, earthquakes, they have everything there, even tornadoes.
You can't hide from Mother Nature.
No, you
Always in
can't.
charge.
And there's no
Exactly.
notice.
No.
The advantage of being in a hurricane-prone area is you can prepare.
Yep.
You can plan. You can get out. You can do what you need to do in order to protect. In the other areas, there's no notice.
No.
It either just hits or you've got a couple minutes notice.
Yep.
So
And
you
the
can't
one thing
prepare.
on the side of, the replacement or the rebuilding that's going to be taking place is the new codes that are out there, building them up to being more wind resistant.
Yeah.
You're never going to, I think, perfect the perfect home that's going to be impervious to nature, but they're certainly giving it a good old college try. And a lot of homes made it through this storm as well, so we can't discount that. So I think that combined with, what's going to come out of insurances and all that other stuff is possibly going to reassure people and boost their consumer confidence, maybe?
Yeah, that's kind of what I was wondering. I mean, what's going to happen over the next year that's really going to impact our market, going forward? And I don't think it's going to be the fear of a hurricane or the fear of flooding. I think it's going to be what, cost of insurance, or whether or not people can actually get
It's going to be
insurance.
the cost of living.
The
out
cost
there.
of living, yeah.
Absolutely.
But, when you compare it to, and I want to get your thought on this too, because, me coming from California, I mean, nationwide, we've had real estate prices go up dramatically, pretty much everywhere, and especially in some of the hot markets like California. But we still have a lot of people that are moving from those markets to Florida because we're still cheap compared to those
Compared to
markets.
some of the states, yeah.
Yeah.
1.75% sometimes is about your average tax for your
Yep.
homestead property.
Yep.
And then you've also got no state income tax.
Yes, which is huge. California was about 13%. So
That's a big difference. That's
a
a chunk of
huge
change.
difference.
Lived in California, born in California, but never owned a property in California.
No, well, yeah, we had a couple out there, and it was ridiculous, you know, and it was just not fun living there. Very expensive. So, you know, kind of talking about the run up in real estate prices and now rates have gone from, you know, heck, we were like at 3.5% at the start of this year, gone up all the way up to, you know, call it 7% now. Right. I mean, that's a pretty big run up, and it's no matter what you think about Florida and real estate and, you know, how great of a place it is here. I mean, affordability is taking a hit for sure. But it's, like I said, you know, Florida is still cheap compared to some of these other hot markets, which is why we still have quite a bit of demand here relative to some other places. So,
well, can I just comment on interest rates?
Yeah, definitely.
In 1986, when I had my first mortgage with a father who was a banker and a mother who was a business owner, and they co-signed for my mortgage, my interest rate was 14.25%.
I was going to say, yeah.
So 7% to borrow money from a bank, I think is a fair price because banks have to make money as well.
Yep.
But
and your 6 to 7% are normal anyways. They're an average rate.
Yeah.
I think a lot of it is a lot of the buyers that we've been dealing with for the last few years.
Younger, used to
They're
low
younger.
rates.
They didn't understand the rates and didn't realize those 2 to 4% rates we were getting were just incredibly
abnormal.
Yeah, that's a good word for it.
Yeah.
So these 6 to 7% that we're getting now, and the banks have to make money. They can't just give everything away.
Well, and if you look at it, you know, I looked at long-term, you know, 30-year fixed mortgage rates since, you know, the 1970s, and the long-term average was like 8.5%. And so it's probably a little bit higher now, given the fact that we've had a recent run-up. But we, you know, we're still not over that, so we're still below the long-term average. So they're still relatively cheap compared to, you know, historical averages. So
I would think right now, if you're going to buy, you probably better get pre-approved and get with a lender because it's not going to be going down. I don't foresee any.
Probably not. I mean, and we can talk about that too. But it's interesting to see kind of what's going on with inflation. I mean, that's the primary driver of rates right now is inflation, and the Fed's doing everything they can to get that lowered. So they're raising the Fed funds rate. They're one thing that they do is they have the Federal Reserve, which has a massive balance sheet, and they've been buying securities on the open market, trying to keep rates artificially low, which they've done for years. That's kind of coming to an end. So that's another reason why rates are being pressured on the upside. But and I didn't have this as a topic of discussion, but I'm kind of curious to see what you guys think. So I'm gonna
Oh, that's fine.
Yeah. So there's a lot of talk about recession and whether or not we're in a bubble right now. What's going to happen if we do go into recession and if prices are considered really overvalued? First of all, do you guys think that we're in a real estate bubble right now?
I don't think so. I think we're on a roller coaster.
Yeah.
So we've gone for the last few years, everything just going up and up and up.
Yep.
And then it kind of plateaued for a little bit, saw a few little dips, just kind of went down the little hill and going back up. And especially with this hurricane that's hit, I think the prices are going to continue to go up.
Yeah.
Because you've got damaged homes that are now being rebuilt. So you have all these older, outdated homes that are going to be fixed up. You've got
a lot of rehab loans.
Yeah, you're going to have all the rehab loans. You're going to have more people moving into the area. So I think your inventory is going to be low, continue to be low for a while. I don't think there's ever going to be, at least not anytime in the near future, a bubble where it's just going to burst and we're going to be back down into the 2008 market.
Yeah, I was going to say that perfectly leads me to the next question. I mean, if you had to say the major differences between, back then, 2008, 2009, and in today's market, what do you think is the main difference? If you had a client that says, well, I think we're going to see that market again today, what would you say to them?
I think it's going to depend on the lenders because the big box banks we bailed out.
Yeah.
And they were giving loans basically to anybody that had a pulse.
Yep.
I think there's a lot of checks and balances in place now to make sure that doesn't happen.
Very different
There's
market.
a lot of fraud going on. I think the I's are going to be dotted better. The T's are going to be better crossed.
Yep.
They're going to better qualify people for their homes. And I think a roller coaster is exactly the way I would describe it. More like Space Mountain. You don't know what's coming around the next bend because you're in the dark. And everything can change overnight.
Yeah.
You get 2 or 3 more of these storms come through and then Okay, now what do we do?
Yeah,
Yeah.
no one could have predicted that rates were going to go up this fast. And
Oh,
then,
gosh,
of course,
no.
no one was going to predict we get hit by, Hurricane Ian. So it was kind of a double
Not even
whammy.
until a couple days before.
Yeah. But yeah, kind of getting back to your point though, it's amazing though the amount of inventory in the market because I've talked to a number of clients recently that said, they don't want to buy because they think that prices are going to drop. They think that all this inventory is going to come on the market because people know that they assume that we've hit the peak. And so anyone that says that, I've been thinking about selling for the past 6 months or a year, now they're going to want to sell and just get rid of the house, which is not
But
happening.
you look at all the numbers too, and you listen to the news reports and the statistics. There are still thousands of people flocking to Florida on a daily basis.
Yeah.
So if more people are coming in and nobody's leaving,
Yeah.
you're bound to have an inventory shortage, and which is why we
Still.
see the huge housing boom.
Yeah.
You got to build on all this vacant land.
Yeah.
So there's also going to be a lot of hedgers that are going to come in. They're going to hedge on the market.
Oh yeah.
I think that you're going to see the homes that weren't worth their value when they put them on the market, except that it was a feeding frenzy.
Yeah.
And people came in with truckloads of cash to buy these properties.
Yeah.
If they were substandard properties then, and geez, they got hit with this hurricane, now it's going to be a problem to maybe offload those. There's going to be a number of them that are still in good shape, that are just older homes that people are like, we built this house in the 50s. Maybe it's time for us to get out of it.
Yeah.
Because the improvement on the codes, the improvement on greening up a house, and with the green initiative and everything, there's a lot of changes still coming down the pike. So it's hard to predict. I wish I had a crystal ball and could tell you which, Powerball numbers to pick. I don't, and I don't think any of us really know. I think right now we're all just doing speculation.
Yeah, I think the best thing that we can do is kind of look at, big picture, kind of what's going on with the market right now. And inventory is the one big thing. And it's like we've had such a lack of inventory for so long because, ever since 2008, 2009 happened, we had massive underbuilding by, builders. I mean, they just didn't build for 14 years.
Yep.
And, we've had a huge amount of demand because of demographics and low rates. And that demand has kind of come off a little bit, but not that much. But we just haven't had that many new existing homes come back on the market. So,
I think there's going to be demands on condo associations as well as HOAs.
Yeah.
If they take care of reserve painting, if they take care of reserve paving and reserve roofs, if they haven't been funding those enough, they're going to be special assessing everybody almost to death, ad nauseum. It's going to drive me crazy. So let's hope that they're doing the right thing and they're running it like a business, not just like we're all on fixed incomes. Hey, look, we're all on fixed incomes too, depending on what our paychecks are when we close on a sale. So don't run that line by me again. Yeah, you're on a fixed income, but you better plan for it because if you can't keep up, you're not going to be able to catch up. It's that simple.
So you're saying that given the fact that they're going to be taxed more going into condo, they're more likely to look at a single family home?
Well, I think that they're going to have to look even more specifically into what those condo association dues cover.
Yeah.
Because some people go into it and it covers a pool, it might cover blacktopping the driveways, and it might cover streetlights. Mm-hmm. But aside from that, if you don't have it broken down, there's a condo development I used to live in Naples that they fully funded their reserves and kept them going. And then when a few of the storms hit, they had to rob from Peter to pay Paul.
Yeah.
And now they're having to special assess everybody to get stuff back up. So I can't speak for all of them, but I would like to say to those that are on boards, start running your numbers, get a professional analysis done if you need to see where you need to be, and get back in line if you're not already. Because that's going to cost them in the long run the sale of their place if one of them or two of them have to sell in some sort of situation where they're downsizing or health reasons, marriage reasons, whatever have you, that they really need to have their pencils sharpened in that case.
Yep.
And it helps the lenders too.
Yeah. It's interesting because we from a lender's perspective, after the condo collapse and Surfside,
Right.
We had a lot of changes with regard to how we look at a condo and how we look at their finances, and just the questions that we ask alone. The condo review forms have changed and been a lot more in depth. Sure. So you got to kind of wonder what kind of impact that's going to have going forward on condos.
Probably going to be new questions about structure. How often have you done inspections on it?
Yeah.
Roxann's husband.
Yeah. Is that what he does?
That's what he does.
Oh, okay.
He does commercial building
All that
inspections.
stuff.
Yeah, nice.
Welding, so that's very important. But a lot of people wanted for the longest time, I want to live on the beach. I want to have a view of the water. I don't want to pay high maintenance fees. Vote down at every board meeting. No, we don't want an increase. No, we don't want an increase. And then look what happens.
Yeah.
You shot yourselves in the foot, and then everybody wants to sue everybody else.
Yeah.
And a lot
It
of
doesn't
those
bring anybody back.
Yeah. Well, and that's kind of what I'm looking at now because I mean it's interesting. We kind of talk about that with Surfside and how that affected condos, and now we're kind of talking about Hurricane Ian and how that's going to affect housing, single family homes going forward, and specifically insurance. Whether or not people can get flood insurance and how much that's going to cost. But it's interesting. I was looking into that, just going well. What kind of impact is that going to have, and what a rate's going to be, and whether or not people can get insurance, and whether or not they think it's going to be worth it. But if you look at, it was interesting what I read though. They looked at the appreciation of homes on the coast versus inland, and within Florida, and the appreciation that they gained on, a house that's on the coast in Florida was far superior to that of inland. So, for decades. So there's kind of a risk reward trade off. Yeah. So there's a big trade off. I mean, you're taking additional risk, but there is a reward for it for sure.
I think that you're also going to have to see not only on a state level, but possibly the federal level, getting involved with putting some sort of moratorium on hikes for insurance.
Yeah.
Because for decades, we didn't have major storms. So the insurance companies didn't have to pay out. Now that we get hit with a catastrophe, that money, I think, should always be kept in accounts where there are readily available funds to take care of exactly these situations, rather than bonusing all the higher ups, and paying dividends out that are steep. Hey, leave it in the bank. We don't know what's going to happen for the next 10 years.
Yeah.
If that 10 years passes, you banked everything and go forward from there. I mean, I don't know what the magic answer is, but there's got to be more common sense involved.
There's just got to be a revamp of the insurance system.
Yeah.
Coming from that as a background, they could take and maybe make a separate roof deductible, because that's where you see majority of the claim. It's not necessarily the house. Majority of it is the roof.
Yeah.
And then you have all the fraudulent claims that are going on. So if they were to take and maybe do a separate roof deductible, still make it part of hurricane, but make the deductible a little more higher.
Yep.
This way the homeowner bears a little more of the cost, get reimbursed or take out a FEMA loan in order to offset it a little bit. I think that would help the insurance market.
Yeah.
Because that's the problem is getting insurance at an affordable price.
That's kind of what I thought. I was sitting here trying to think about, okay, what kind of impact is this going to have on the Florida housing market going forward? Is it going to be the fear of, another disaster like that? And, the clients that I've talked to aren't really scared of that. That is not their concern.
It's a lifestyle they want.
Yeah, they do. They're going to want it no matter what.
Lifestyle.
Yeah.
Just call it
So,
plus you don't have to dig snow out.
Yeah, it's whether or not they can afford it. Can I get insured? What costs is, what's it going to cost me to get insurance?
Am I going to be spending $800-900 a month between insurance and taxes?
Yeah.
Which is about what it's going to end up being. You're going to be about $1,000 a month with the way the insurance rates are going up and the property taxes going up. It's not your mortgage that's killing you. Your mortgage is low. It's your property taxes and insurance that is taking up majority of your payment.
Yeah.
And just on 60 Minutes this past weekend, where I live, Babcock Ranch was featured, and the part of the interview was with an insurance guy. And they interviewed him and said, well, what's going to happen with this? He says, well, the questions we're going to have to ask is, did wind cause the problem? Did rain cause the problem? Did water coming in cause the problem? They've got to go through and sort all of this stuff out. So there's going to be a lot of pieces.
And what is a flood? Yeah, there's a difference between water coming from above and water coming from below.
That's what we were just talking about. They have to determine what was the root cause.
Yeah.
Well, it can be from a roof. It could be from a toilet running and overflowing. It can be from a lot of things, but it's water.
Yeah.
It boils down to water.
Yeah.
Sorry, boils down. Didn't mean a pun.
That was a nice one.
Well, I tried.
So, given all that, given the fact that we have, higher prices, higher rates, we've, had Hurricane Ian, it's shocking to hear, now is still a good time to buy. And, if you have clients that want to move here, and they're kind of concerned about that, and they say, do you think now is a good time to buy? What would you say to them, given what we've kind of been up against with, pretty much everything?
Do your due diligence.
Yeah.
Definitely do your inspections. Don't be penny wise and pound foolish. Pay $450 to have the mold inspection done.
Yeah.
At least then you've got something saying, there's no mold in this house, versus buying a home that had a seal of, kills over it, invisible paint putting over it to get rid of the magic mold.
Yeah.
And then when you finally buy it and start tearing it apart, if that's what you're going to do a remodel on,
Yeah.
you find out the problem is worse than it ever was. Did you have the inspection? No, I didn't. Buyer beware.
Yeah.
ahead.
No, I was just going to say, I think, any kind of problem that we have right now, the insurance is kind of a biggie. We need to find out what's going to happen with that, where rates are going to be, and what kind of coverage people are going to be able to get. But, if people are, number one, waiting for prices to drop, probably not going to happen.
It's not going to
just
happen.
because of the fact that, people always want to move to Florida. Inventory is low. There's not enough inventory coming on the market to really affect prices at all.
Well, I think what people that are displaced have to watch out for also is gouging on rental amounts.
Yeah.
Because I can tell you that
Rent is a real
witnessed
problem.
Something the other day where somebody is wanting $15,000 a month
Yeah.
for a house to rent, and that's not traditional in our market, where specifically where they were looking. So I think there's going to be some trouble with that, as well as vendors doing repair work.
Yeah.
You got to know what you're doing and got to get them vetted.
Yeah, it's kind of interesting because I've talked to a number of first-time home buyers, and they basically just say they really can't afford to buy a home right now for a number of different reasons. Rates are too high; that causes their payment to be higher. Prices are higher, so they can
They
afford
haven't
that.
balanced each other out.
Yeah,
You've
so
got
they
still the
have
high
that.
prices. The prices are still going up.
Yep.
Interest rates are going up. It makes their buying power a lot lower.
But then I started thinking about, okay, what kind of impact is that going to have on the real estate market? And that's going to push a lot of first-time home buyers out of the market, or people that typically would have bought a house, they can't now.
It's going to bring Florida back down to a retirement state versus a family state.
Well,
Because
I don't know about that either,
first-time
because
home buyers.
a lot of the retirees are running out of prime that already own here and have to put money back into fixing it. So 6 one way, half a dozen another. And then during COVID, a lot of those parents were helping out their children, their grandchildren. They were going through their cash quicker than they had anticipated, because who knew that was going to hit us?
Yeah.
And now it's going to be a bit of a juggling act, I think, to see who's actually going to be buying in Florida and who are going to be good qualified buyers. Is it impossible to see, the mountain through the fog? No, I think we can see it. It's just going to have a little more patience getting to that point, is what it's going to take on everybody's part. Maybe they need to relook at the FAR contracts and that stuff too, as to see if there's any quirking changes or tweaking they can do to those.
Yeah.
To extend the period of buying or selling a little bit longer, to make sure that everything is written in there as to what they should do. It mostly is.
Yeah.
But it's like pulling teeth, getting people to actually read what you send them.
Yeah.
Oh, yeah, I signed it. Did you read it? That you don't get to read. Come on, people, read. It's really not that hard to do. Take the extra 20 minutes out of watching TV or sitting at a bar talking to somebody and actually read your paper.
It's a big investment you're about to.
You're not kidding. It's
you're
bigger than
forking
any
out
car.
hundreds
you're
of
gonna
thousands
buy.
of dollars you need.
Know what you're buying.
Yeah.
And it's interesting too, because you have so many people that want to buy a house, and they did have the money, and they did have a good enough job to where they could afford it, good nest egg for down payment and everything else, but they just can't do it at this point. So that's going to put even more pressure on the rental market, which means there's going to be that much more demand for that one rental out there, which is going to
higher
cause
the demand, it's going to cause the
rental
rates
prices
to go
are
up.
going to go up even higher. So that's kind of my argument, is that no matter what you think about where real estate prices are and where rates are, the rental market is not the place you want to be. It's going to be even worse.
No,
And
because
they've
the
got to be
investment.
prudent and wise, though, about that, because you can't just go in there and increase your rental rate by $1,200 on something that was a $600 rental. Now it's going to be an $1,800 rental without justifying what's going on around you. It's like the comps for a home. You better do the comps on these rentals, or you're going to get yourself in trouble if you're a rental agent. So everybody's got to really sharpen their pencils now. Get your continuing education done. Read up on all this stuff, which is, not the most fun to do.
Yeah.
I just told everybody to read. I'm going to be reading too.
Well, it's kind of hard to know what's going to happen. I mean, we sit here, every day doing what we do and try and predict what we think is going to happen with real estate prices and rates. And everyone was wrong about this. No one predicted rates are going to go from 2.5 all the way up to
Not in
7%.
such a short
Not
time
in a
period.
short time
We
period.
anticipated they'd go up because you can't keep it low forever.
No, and inflation. I mean, no one would have thought inflation
And
was going
once
to
we
be
got the supply
8.5%.
chain
9.
almost reopened,
Yeah.
then this hits. So there we go.
Yeah, that's what you call a black swan event, which is
Yeah.
so that's that is kind of my thing, because I used to manage money, and we always talk about the black swan event. What is going to happen that no one ever predicted?
Right.
And before all this happened, before prices ran up, before rates ran up, before Hurricane Ian hit, I was always telling people that, look, I'm extremely nervous about the fact that everyone loves this market. Everyone loves it. And I can't find one person that says, I don't like this market. It's gone up too
It
fast.
can't stay
It's
a
not
cream of the
sustainable.
crop forever.
No.
No.
And I used to manage bonds for a living, so I was a bond trader. So, and we're notorious for being pessimist because that's when we make money is
Right.
when when everything's horrible, when it hits, the shit hits the fan and the stock market goes down, that's when bonds do well. So that's
Right.
kind of what we want is for things to be bad, so to speak. So that's what I was kind of thinking about, what is going to negatively impact this market going forward. And I'm trying to think about what's that going to be. And I guess the only thing that I can think of is, number one, the insurance thing is going to be a problem.
I think is going to be the biggest ordeal.
Number two, and I want to get your thoughts on this, is like if we go into recession, which I'm pretty sure we will at this point, and no one really knows.
Hard to say.
I think it's definitely going to happen, but no one really knows how deep it's going to be.
Yeah, if it is, it's going to be a mild one.
so?
I don't think it's going to be. Yeah, I just can't foresee it yet.
I think there's going to be a lot of job opportunities down here and high-paying job opportunities because they're going to have to redo the infrastructure in Florida somewhat. I mean, for electric grids, this, that, and the other thing, it's stuff that we've got to get taken care of in our own state first before we can really move forward. Interstates, I mean, I wish we had high-speed rail trains. We don't, but one other option we could have to get people out of here a heck of a lot quicker is a lot of those trains just zapping people to wherever they could get to out of harm's way.
Yep.
But I also think that something people should really consider now, if they are doing the purchase of a home, is to put a home warranty on it.
Yep.
Because, appliances are costing more than they've ever cost before. Repairs are costing more. Some of these home warranties even have limited roof options, not necessarily by a storm, but let's say moving forward, you just get your roof repaired. Suddenly you've got another leak and the roofer's saying, sorry, it's out of my warranty time.
Yep.
You've got something and it's under $1,000, usually depending on the size of the home, to put a warranty on it. And sometimes that can even include the pool equipment and the pool itself. So maybe it's time for people to start watching that instead of just saying, well, I'll just pay for it. Well, you've got the cash now to just pay for it. But if you have a policy in place that pays for the majority of it, you pay a $100 deductible, you move forward, it gets taken care of. Just another component to think of.
I was just thinking about this and kind of curious, just for my own knowledge, but about 30% of the buyers recently have been, cash buyers in this market. So what percent of those do you think do not have either homeowners insurance or flood insurance? Because it's obviously not required if you're 100%
I would
cash.
say about 80% of them we've dealt with a lot, and majority of them have not purchased insurance along with
Or they
it.
self-insure.
Yeah.
Wow.
Which is
Yeah, that's true. I guess.
Self-insured, basically no insurance.
Yeah, that's true. We have some friends that live on Sanibel, and it was obviously one of the hardest hit areas there, and they got completely wiped out. But they had enough funds where they're just like, fine, we'll rebuild. I'm not sure if they were insured at all or not, but they just.
Collier County, Port Royal, a lot of money down there, tons of money down there, and they've got some of them have more money than God.
Yep.
So what do? It's not going to hurt us to rebuild.
Yep.
But not everybody's that fortunate in those areas.
Right.
And a lot of people that live on the coast do have pretty deep pockets. You can't argue that, but I'm sure that there's a lot of people right now crying between the market having gone down, maybe costing them a little bit of money in the market, and then also having to deal with this, and some of them have 2 or 3 homes down in Port Royal in those areas.
Yeah.
So it's going to be interesting to see how this all comes out in the wash, to be honest.
Yeah, so I guess, probably 2 last questions I had. Number one, and we kind of touched on this, but, maybe kind of rehash it again. What are some of the advantages you think are of, what they're being buying in this market right now? Maybe that we didn't see, when the market was really hot.
Well, if you're going to see people trying to get the check from the insurance company, settle everything with the insurance company, and walk away from the property, you're going to have an opportunity possibly to buy what would have once been a very high-priced home, maybe for dirt value, tear it down and rebuild. And I know that there's still going to be plenty of people and foreign investors in the world that are probably going to look at that and say, let's jump on it.
Yep.
There's a lifestyle on Sanibel and Captiva. There's a lifestyle down on the coast in Naples and Fort Myers Beach, in Bonita, Estero, all of those areas, Sarasota, all the way down, that people like living either on an island or on a beach. And when they've got that taste in their mind, they're not going to really want to budge from that
Nothing's gonna
lifestyle
stop
because of
them.
ego.
Right.
So ego
I
is going
agree.
to play into this.
They're not
as
going
well.
to downgrade their their lifestyle.
They have a dream, and they're going to make it happen.
They're going to make it happen one way or the other. It doesn't matter.
The ability,
if it takes
absolutely.
Yeah, that's kind of what my thought was on that.
Yeah.
So, I mean, that's why my thought was it's going to come down to affordability, whether or not they can afford it. Because if they can, they're going to do it no matter what.
Well, and most people that want to live here in Florida, they will do whatever it takes
Yeah.
in order to remain here.
Yeah.
If it means downsizing a little bit smaller house, they still have the luxury and the advantage of the sunshine out here.
Yep. Okay. And then just, again, this is something we kind of talked about the whole time. But so if, you had to give a forecast of what's going to happen in the market over the next year, what would that be, you think? Just kind of a big picture forecast with real estate.
I think we're going to see a lot of homes just kind of being dumped and investors coming in and swooping them up, fixing them up, and making a little bit of money. But then
Still low inventory, low supply because it gets bought as soon as it's back on the market.
Yeah. And I also think that, I don't know, I think people are there's a lot of them that are just going to rebuild.
Yeah.
And, get their homes back up to living condition again.
Yeah. Okay.
Again, that's the ego side of it. They don't want to leave. We love it here.
Yeah.
We moved to the state for a reason. We hate snow. I totally agree with that.
Yeah.
And I also agree with like I said, the hedgers. They're going to come down here and they're going to see if they can scoop up something at a really big discounted rate and put the money back into it and build something. And if they've got the deep pockets to do it, they can also turn that back around.
Yeah.
I mean, LA has a lot of, structural problems when they have earthquakes.
Oh, yeah.
The people
people
raise
still
their
live there.
build out there.
Yep.
Money keeps pouring in.
It's the lifestyle for sure.
But I think we're going to see prices, unfortunately, I really think prices are going to continue to increase.
Yeah, I
out
think they
here.
will too.
With the shortage of the inventory, that automatically, it's a supply and demand.
Yeah.
But then you have all the older homes, the 50s and the 60s that have gotten wind damage, water damage. Now they've been, updated based on insurance money or whatever came about. That's going to drive those homes, instead of them being worth $250, $300, they're now going to be worth $350, $400, just depending on what it is that they do.
Yeah.
So I think that's just going to drive the prices up, and more people thinking they can come in and move here and find a good deal, and they're going to find out that they're not getting that deal. They come down here, they stay a couple weeks and fall in love, and it's like, okay, well, maybe we can't find a good deal, but we love it. We don't want to leave. That's why I live here.
Yeah.
I came down to visit and never wanted to leave again.
Yeah. Yeah.
What I think is also going to happen to the real estate profession down here is, you better know your game. You better know what you're doing. And people that are asking for people, discount your commission rates, et cetera, et cetera. Okay, we need to eat. We need to represent you in the best way that we possibly can. So you're getting the most dollar per square foot that's ever been thrown at people in the history of this state, probably the country.
Yeah.
And you want us to back up and take a lesser commission to help you out.
Yeah.
I don't understand the logic of that. Are we willing to talk to people about commission and everything? Absolutely. But I don't work for free, and neither does Roxann. We'd both be broke and not sitting here in decent shirts.
Yeah, and we have to get more creative on the lending side too, because before it was 30-year fix. Everyone did that. No questions asked. But now we're looking at are we going to do an adjustable rate mortgage?
I was just going to ask you, are their arms coming back in? And
Yeah, but I mean it's kind of a tough market right now because rates are kind of getting up there.
Right.
But if you look at the ARM market,
when ARMs came in is when the rates went up.
Yeah, I mean, they're becoming more popular, but they're still only about 8% of the total. They've gone from maybe 4 to maybe 8. So the amount of demand for ARMs has doubled, but it's still very low just because I think a lot of people have kind of a bad taste in their mouth from 2008, 2009 when it was a completely different type of ARM that people got then. They had balloon payments. They had, teaser rates that were at 1% for the first couple of years, and they jumped up to 13%. People got foreclosed on. So it just takes a lot of educating the consumer about that type of loan.
We've kind of been starting with the new, not new, but with the 203H program.
Yep.
I think that's going to be a big driving force in order to help stimulate the economy.
Yeah.
And to keep people here, because with that program, it can keep people here.
Yep.
In fact, if you would like to expand on that a little bit for our audience that's listening today, about the 203H as to what the qualifications for it.
Well, yeah, this is going to be something we're going to have to dive into because we have a new program that's kind of tied in with that. So this is something that's brand new for us. So it's not something that we'd want to get into on this one because we got a lot of changes to it, and we in fact we have a call tomorrow about kind of the launch of that new product.
You'll be doing some.
And I'll be doing.
Yeah.
And I'll be doing.
I've been doing as much reading as I can about it because people are seeing it posted on social media sites and calling, asking about it. It's like, well, I don't know a lot about it yet, but I mean, you got to get a hold of the lender that does know about it.
Yeah, there's a lot of
It's
new stuff coming
up.
too. Yeah, because we have the
Yeah.
the 2-for-1, the 3-for-1 buy down, where you have kind of a lower rate up front. It increases the second year, that increases yet again the third year. We have ARMs that we're doing. We have the rehab loans. There's a lot of stuff that we're doing now, and we have a lot of specific loans that maybe we'll do a podcast on that as well for specific groups of people, like Hometown Heroes. We have doctor loans, which are basically VA type loans for doctors,
Right.
veterinarians,
I've heard
stuff
of
like that.
those.
Yeah, so a lot of new stuff coming, but the bottom line is in this kind of market with prices and insurance crazy after the hurricane and rates where they are, we're going to have to get a lot more creative than we were in the past. But like I said, there's a home for every person out there. There's a loan program
a loan for
every
everyone
person
out there.
So anyway, I think that's all I had.
Well, I just want to say to all the first responders that helped us out with this, thank you very much.
Yes.
Oh,
For
yes.
sure.
Thank you.
Yep.
And
Yes.
we had a bunch of linemen at the Lee Civic Center lined up out there along with ambulances and fire brigades and everything. We had neighbors taking over plates of food,
Yeah.
and all that
Yeah.
stuff. And it was really nice to see the communities coming together to help each other.
From all over. Yeah, they were not just in Florida, too, from all different
And not
states.
even just the first responders. I mean, just the amount of individual people just voluntarily willing to help
Absolutely.
Yep.
anyone in need.
Nice to know people still care.
Yep, for sure. So, okay, awesome. Well, thanks, guys, for being here. So,
for having me.
if anyone wanted to get a hold of you guys, what's the best way? What's your, you want to tell them your cell so they can call you directly, and then you as well, Kurt?
My cell is 239-470-1632.
Okay.
And mine's 239-595-2200, or you can drop us an email at extremeteamcoordinator@gmail.com.
Okay.
Go to both of them.
That'll go to both of us. Yeah.
Okay, excellent. Thanks a lot, guys.
Thank you.
Absolutely.